What is up, everyone, and welcome back to Explain the Charts. Today is October 4th, 2025, and we are taking an in-depth look at Ethereum, or ETHUSD. We've seen some intense volatility recently, so we'll start by covering the crucial news and events driving the market, then dive deep into the charts to see what the price action is telling us. First, let's talk about the news, which has been a mix of bullish long-term sentiment and short-term volatility. There's a lot of chatter about institutional adoption, with Cointelegraph reporting that Ether's potential to break $5,000 is contingent on this, though investor sentiment has been muted recently. We're seeing significant corporate interest, with firms like Bitmain becoming massive corporate holders, now possessing nearly 2% of the entire ETH supply. Furthermore, market analyst Tom Lee has even characterized Ethereum as Wall Street and White House's chain of choice, signaling strong belief in its future. On the development front, Swift has been confirmed to be leveraging the Ethereum layer, 2-Linea blockchain, and Vitalik, but Aaron has outlined a roadmap to scale the network and make it quantum-resistant, which is huge for its long-term viability. However, the short-term picture is much more chaotic. NewsBTC and the Crypto Times both highlighted a significant recent event, ETH breaking below the psychologically important $4,000 level. This downturn was fueled by a broader crypto market sell-off and heavy liquidations, with reports of $32.86 million in trader liquidations during one volatile period. We also saw sharp outflows from ETFs in late August and early September, adding to the selling pressure. Now, let's switch to the daily chart and see how this news lines up with the price action. Looking at the bigger picture, we can see a massive run-up that started in early August, taking the price from a low of around $3,500 all the way up to a peak of nearly $4,800 by mid-September. This powerful uptrend reflects the bullish sentiment surrounding potential Fed rate cuts and institutional interest in ETFs. However, following that peak, we entered a sharp correction phase throughout the latter half of September. This is where the news about the market onslaught becomes clearly visible. You can see this large red candle on September 25th, where the price plummeted from an open of around $4,154 down to a low of $3,825. This move lines up perfectly with reports of heavy liquidations and the break of that critical $4,000 support zone. That low around $3,825 acted as a key support level, where buyers stepped in aggressively, which also corresponds with news reports about large wallets accumulating during this dip. Following that bounce, the price has been fighting to reclaim and hold levels above $4,000. The price managed to climb back, but faced resistance as it approached the $4,600 level just yesterday, October 3rd. This shows that while buyers defended the sub-$4,000 area, sellers are still active at higher levels. The primary long-term resistance remains the August and September highs between $4,700 and the peak just shy of $4,800. On the support side, the recent battleground around $4,000 is now a key psychological level to watch. If we lose that again, the next major support would be the low from September 25th at $3,825. Now, let's zoom into the shorter timeframes to see the most recent action. We'll switch to the 15-minute chart. Looking at the start of October, we can see a significant upward impulse. Let's focus specifically on this surge on October 1st. Here we can see the price was consolidating around the $4,130 level before a massive surge of buying pressure pushed it over 3.5% in just 45 minutes, breaking through $4,200 and reaching above $4,290. This is a clear example of the volatility we've been seeing, where large moves can happen very quickly. After that pump, the price entered another period of consolidation before making its next leg up. Now, looking at the full 15-minute chart for the last couple of days, we see the continuation of that uptrend from October 1st. The price climbed steadily, eventually peaking yesterday, October 3rd, just shy of $4,600, specifically at $4,596. This level has acted as immediate short-term resistance, and the price has since pulled back to consolidate. Currently, the price is trading around the $4,514 mark. In the very short term, we have established a support level around the $4,430 area, which was the low from yesterday's pullback. A break below this level could signal further downside and a retest of the lower $4,000s. Conversely, if we can break above the recent high of $4,596, it would be a strong bullish signal for a continuation towards the major resistance levels we saw on the daily chart. The volume during this recent consolidation has been tapering off, which is typical before a larger move. So, let's recap the key levels and potential scenarios. For the bulls, the immediate goal is to break and hold above the recent resistance at $4,600. A successful break here has a 60% probability of initiating a retest of the major resistance zone between $4,700 and $4,800. Especially if we see positive news flow regarding ETFs or renewed institutional buying. The ultimate bullish target in the medium term is a break of the all-time high and a push towards and above the $5,000 psychological barrier. A sustained period of high volume buying above $4,600 would reinforce this bullish outlook. On the other hand, the bears are watching for a failure to hold the current consolidation range. A break below the immediate short-term support at $4,430 would be the first warning sign. If that happens, there is a 70% probability of a slide back towards the $4,100 to $4,200 support zone. A definitive break below the major psychological support at $4,000 would be a very bearish development, likely leading to a retest of the September low at $3,825. This scenario would be reinforced by negative macro news or another wave of large ETF outflows. Key things to watch for in the coming days are the SEC's commentary on ETF filings, particularly BlackRock's proposal to add staking. Also, keep an eye on on-chain data for whale movements and the flow of capital into and out of exchanges. The overall market sentiment, heavily influenced by Bitcoin's price action, will also play a critical role. Remember, this is not financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research before making any investment decisions. That's all for today's analysis on Explain the Charts. If you found this helpful, please like, subscribe, and hit the notification bell so you don't miss our next update. Stay safe and happy trading!